Are you watching the price of Bitcoin go up and up? Or maybe you believe in the store of value or reserve currency narrative? Whether you're looking to buy and sell Bitcoin quickly or you want to open a long-term position, you're going to need some capital. I was in a similar position at the end of 2018. I didn't want to sell any of my assets to generate liquidity, but I noticed my 401k had appreciated significantly. I decided to take out a loan to purchase a basket of digital assets. I figured I could use the profits to pay back the loan. If you're interested in learning the outcome of this strategy and how I further expanded on this move, I strongly encourage you to watch every second of this video. I promise to drop gems throughout the video that will augment your financial literacy and could potentially produce life-changing outcomes. It's very likely you'll have questions related to your nuanced circumstances. I highly recommend that you ask those questions in the comment section below. Lastly, if this video provided any value, please make sure you click the like button. And if you're looking for more financial insights, I recommend you subscribe and you click that notification bell to get real-time alerts. With that, let's go ahead and begin this tutorial. Hey YouTube, in this video, I'm going to take the time to basically outline my personal strategy, what I've done. Now, this is in no way intended to be financial advice. You guys have to do your own research to discover which strategy works best for you. Now, just to put this video in context, let me give you a short story. So back in 2018, November-ish, I saw the market sort of tilting and I thought we could potentially make even further lows. And so I wanted to capitalize on that huge drop, but at that time I didn't have a lot of cash. I had some, but given the opportunity, I wanted to find a way to generate additional liquidity. I didn't want to sell any of my hard assets. And so I noticed that in my 401k post 2016 had gone up quite a bit. And to take full advantage of my 401k, I decided to take out a loan, and I was able to buy a decent chunk of digital assets before we took off during the rally in 2019. Even though I could have paid off the entire balance of the loan, I decided to keep it outstanding. And that may sound counterintuitive, and in this video, I'll talk about why I did that. Now, whether you're watching this video because you have a 401k or not, as long as you have digital assets, I recommend watching the wealth management segment of the video, because in that section, I'll show you guys how I leverage my digital asset portfolio to further add diversity to my overall portfolio, but also earn a respectable yield. And if you have any questions, I strongly encourage you guys to put them in the comment section below. I have an extremely good track record of responding to comments, and I think you guys should take full advantage of my responsiveness while my channel is still small. With that, let's go ahead and dive into this video. The best time to use your 401k to diversify into digital assets, in my view, would be when the stock market is hot, when it looks a little bit tippy-toppy. So what I did was I decided to change my contribution allocation. So for every dollar that they were taking on my paycheck, 80% went into stocks and $20 went into a stable income fund, which is basically like a cash reserve that accumulates a small amount of interest. And I've outlined what my strategy was in this piece that I wrote on TradingView. My tentative plan was to basically change my total allocation on every pullback. I outlined my bullish thesis on the equities market, and there was potential for us to have a decent correction at that time. And I decided that if we did, that's when I would convert my portfolio, my 401k portfolio, not the new contributions, but the existing portfolio that I have, I would change that allocation to 80% equities if we hit that red bar, but we never did. My portfolio was overweighted in cash, changed a little bit of that into equities when we were here, but unfortunately, since we didn't have a pullback, I wasn't able to add to that position. However, like I said, at this stage, the new contributions that were going in, 80% of them were going into equities. And at that time, I was working a lot of OT. So there was a lot of pre-tax dollars that were going into my 401k. And with this recent rally and a lot of the stocks that I've looked at, Tesla and others, to me, they're looking a little bit tippy-toppy. I would imagine that we need some sort of correction. Anything can happen moving forward, but that's just my personal speculation. But if you look at Bitcoin, if you look at the digital asset space, we've had a almost year-long correction. And I think there's a potential for us to have hit a bottom. I mean, this area here, to me, I was tweeting this earlier. This area here and this area here looks a little bit like accumulation to me. And it doesn't look like we're going to stop. Now, if I'm correct about this and we're in that accumulation phase, then there's a potential for us to see something like this. And then you'll see something like this. You'll see people late to the party. Given what I've just outlined, to me, it seems like this would be a good opportunity for me to take out a 401k loan. I can use all the gains that I've made in the stock market and then buy the dip in the digital asset space. And if you disagree with my underlying thesis, I strongly encourage you guys to briefly outline your bearish case or why you think this strategy wouldn't work or what the potential dangers are. For me, my 401k is with Vanguard. And with Vanguard, they actually charge you a $50 fee for opening a loan. Also, the interest rate is 5.75%. Now, this rate obviously can be higher if you extend the duration of the loan. That means you'll be paying more back, but your monthly or bi-weekly payments will be less. Now, this is going to be different probably with different people because everybody doesn't have an account with Vanguard. So make sure you read the fine print before taking out a loan. And with Vanguard, they only allow you to have one outstanding loan at any given time. So you can't take out two separate loans. You can only take out one at a time. And there are also maximums of how much money you can take out. So if you're flush with 401k cash, just keep into consideration that you may not be able to take out as much as you would like. And with my Vanguard account, I'm only able to take out 50%. So let's say I had 80,000. I would only be able to take out 40,000, even though the maximum loan amount is 50,000. Now, given these rates, there's ample opportunity in the digital asset space for arbitration because the rates here, let's assume your rate is 6%. Currently on Blockfi, they're giving you 8.6 compounded interest. So let's say you're not big on digital assets, you don't want any exposure to Bitcoin because it's too volatile. You can take that money and actually get a decent yield on it. And if you're open to buying 500 MCO tokens, I've done a review on crypto.com in the past. Make sure you click on the upper right hand corner of the screen if you want to access the full review. But they currently offer a interest rate of 12% if you stake 500 MCO tokens. So if your interest rate is 6% on your 401k loan and you're getting 12% from crypto.com, you're basically putting that extra 6% in your pocket. Now, in terms of the on-ramp, once you get your USD loan into your bank account, where should you go to buy crypto? Well, most people go to Coinbase. It's probably one of the most easiest ones to use. And depending on how much verification material you submit, the deposit limits are going to be pretty large. And they actually have a wide variety of assets to choose from. So if you wanted to buy something aside from Bitcoin, this is probably one of the better platforms to do it with. I just don't like the fees here. For me personally, I do my best not to buy anything from Coinbase if I can help it, because other exchanges offer competitive rates in terms of fees. Another option is Gemini. This is another one that's not the best in terms of fees. However, from my experience, they're very quick about bank deposits. They're faster than Coinbase when it comes to withdrawals and deposits. If expediency is a key issue for you, then this may be the way to go. And also, I'm going to be talking about Blockfi's wealth management services, and Blockfi custodies with Gemini Custody, which is also owned by the Winklevoss twins. And as I mentioned earlier, Blockfi is giving 8.6 compounded interest. So if you use this platform, stay tuned. I'll show you guys a video tutorial on how to get your USD from your bank account to a Blockfi account relatively quickly. Now, if you're concerned about fees and you want to maximize the amount of crypto you buy for your dollar, I'd recommend using Voyager. They actually pool liquidity from various exchanges, and they'll use their matching engine to make sure you get the best market price. And on top of that, they don't charge any fees. So if you're looking to get the biggest bang for your buck, I recommend Voyager. Now, there are some issues with Voyager. There's certain cryptos if you buy here, you cannot withdraw, but you can withdraw the major ones like Bitcoin, Ethereum, Bitcoin Cash, Litecoin. And on top of that, if you keep your assets on your wallet on Voyager, they actually give you a decent yield. They give you 3% on Bitcoin, 5% on the Voyager token, and 2% on various other crypto assets. And these distributions occur monthly. So basically, you can buy your crypto here at very competitive prices and earn a monthly yield on them. If you're interested in learning more or you want a tutorial, I've done 2 videos in the last few months. Make sure you guys check those out. Blockfi started out by offering crypto collateralized loans. So you could basically take your crypto asset, your Bitcoin, your Ethereum, let's say you had $20,000 worth of Bitcoin and the loan to value ratio was 50%. You give them $20,000 worth of Bitcoin, they'll give you $10,000. And you can use that liquidity to do whatever you want, add diversity, leverage your portfolio, etc. Later, they added a interest account, which allowed you to basically deposit your Bitcoin, Ethereum, or GUSD and earn a respectable yield on those assets. That would be distributed monthly, but that would also compound as well. Most recently, they added this trade feature that allows you to convert your digital assets. So they currently support the following assets. They recently added USDC and they added Litecoin. And they have access to a large liquidity pool, much like Voyager. So you basically get the best price. And on top of that, no fees. Just like in the legacy system with brokerages, you're seeing Robinhood, Fidelity, Vanguard, all offering 0 fee trades. You're seeing the same trend take place in the digital asset space. But the great thing about having all these services on one platform is that, number 1, you'll save on fees. Number 2, it's obviously more convenient and there's less micromanaging of numerous accounts. By the way, folks, I'm going to do you a huge favor by consolidating all the links to all the platforms that I've just talked about to make it easy for you guys if you haven't signed up for them already. So if you look in the description box, you'll see links to all these platforms and all the videos I've published related to these platforms as well. Some of them even offer phenomenal sign-up bonuses. For example, Voyager, you can earn up to $25 worth of Bitcoin by opening an account with them. And by the way, I've disclosed all my account details, including the interest I've earned, my total balance in past videos. So make sure you guys check those Blockfi reviews out if you wanted to learn about exactly how much I've been paid monthly with the balance I hold with Blockfi. Now, let's say you've taken out your dollars, you've bought Bitcoin or other cryptocurrencies with them. There's a few platforms out there that actually allow you to take loans out using your digital assets as collateral. There's a few advantages to this strategy. Number 1 is obviously you get to keep exposure to your digital assets. So the Bitcoin I buy and then I give up as collateral, I can get that back as long as I give the borrowed money back to the lender. Secondly, you can take that borrowed money and actually buy even more Bitcoin if you're speculating the price will go up. So for example, I take out a loan using my Bitcoin as collateral. And so let's say I give up $20,000 and I take $10,000 out. I can use that $10,000 to buy Bitcoin or other digital assets or even real estate if I take out a large enough loan. So if I bought more Bitcoin, let's say the price of Bitcoin goes up by a factor of 2. So the price basically doubles. So now I have $20,000 worth of Bitcoin. I can sell half of it to get that 1 Bitcoin back that I used as collateral. So now I got that 1 Bitcoin plus another $10,000 worth of Bitcoin. It's basically another method to leverage your position. And the cool thing about Blockfi is that they allow you to do that all on one platform. But the reason why I'm showing you Nexo, and again, this is another platform that I've done a review on in the past. To my knowledge, Nexo has the greatest variety of cryptos that you can use as collateral. Let's say you take that loan out and you decide rather than buying Bitcoin, you wanted to diversify into other crypto assets. You could then take that mixed basket of crypto assets, put them on Nexo, and quickly take out a loan on their platform. And what they've done is they've actually lowered their rates quite a bit. You can now borrow at 5.9% APR. If you wanted to learn more details about this leveraging strategy, I encourage you guys to watch a video I did in the past. I'll make sure to include it in the description below. But in that video, I basically show you guys how I use Nexo and even BitTrue to leverage my current digital asset holdings to buy even more crypto assets. Now, there is a downside to this strategy. What if you buy something and it goes down in value? Well, you have two options. Either you can try to raise the funds to give that loan back to get your digital assets back, or two, you can actually give up even more collateral. So what basically happens is, if let's say the price of Bitcoin falls too fast, as it approaches its liquidation value, meaning as it approaches a price where the exchange will sell your digital asset, the one that you gave up as collateral, they'll sell it to basically make the lender whole, and they'll give you the remaining balance back. To avoid liquidation, you can actually give up even more digital assets. So what I did was I didn't over leverage myself. I used a small portion of my portfolio to gain a little bit extra liquidity. This way I had enough cushion to avoid liquidation. I'm also doing a few other things to maximize my returns in this upcoming bull run. And if you're interested in learning more about them, make sure you guys subscribe, click that notification bell. And if you found any value in the information that I provided today, please click that like button. With that being said, this is Crypto One Step signing out. I'll talk to you folks next time. Bye.